This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In this video, we'll be going over the data sets. Usually I'd be covering the earnings, but there really are no major earnings this week. There's only Applied and Tilray, which Applied is Wednesday evening, Tilray is Thursday evening. If you're interested in those, then those are the days to look out for. Um, Other than that, I will be going over the technical analysis for SPY, and I will be trying to cover precious metals in this video. If I don't get to it in this video, I will be making a video almost immediately after to cover precious metals. And this will be for the week of January 5th, 2026. That's so weird to say. And with that said, let's go ahead and jump straight into the data sets. Now, there is a lot of data this week. Does look a little overwhelming when we really haven't been having a ton of data since the government shutdown has, ended and the government opened again. With that said, let's kind of go over what I feel is going to be really important this week. Again, I always suggest going to investing.com, checking out the calendar as, this is the tool I use. It's usually accurate for the most part, but sometimes it does have, the bugs where it will show a specific data set that isn't going to be, arriving that day. So other than that, that's the only issue I've had with it. It's a great tool. No, I'm not sponsored or anything. With that said, 10 a.m., we have the ISM manufacturing data. And there's the two parts to it. There's the non-manufacturing side and the manufacturing side. The non-manufacturing side comes out on Wednesday. So again, 10 a.m., the manufacturing data comes out. That is multiple different parts that comes in. Employment, EMI, prices. So there's multiple different data sets to that. Just be aware of that. There's also the Atlanta Fed GDP now at 12 p.m. Again, they have been pulling the, forecasted percentage down pretty much, well, not just for forecasted, but the actual percentage down quite heavily. This was starting to pull back up above the 4 percentage or, the 4% range, and now it's pulling down to the 3%. And very likely over the next few weeks, we'll see this pull down probably to the 2.9, if not the 2.8. Now, with that said, going over Tuesday, and let me go ahead and scroll down just a little bit. Now, Tuesday, we have the global or the S&P global PMI data, which is comprised of the composite and services data. Both of these are forecasted to come in lower, so take that for what it is. I don't expect a whole ton of price action from it, but since there's not any other data that I'm aware of that day, then very likely those will move the market very slightly, and that's at 9:45 a.m. Now on Wednesday, we have the at 8:15 a.m. we have the ADP non-farm employment data, and this is the employment change. So this is a pretty big data reading. Very likely that's going to move the market quite a bit in pre-market, but we will see. Now we do have the factory orders. This isn't super important right now, but again, we are seeing a continuous decline in the factory orders. At 10 a.m., we have again, the non-manufacturing side of the ISM data. It comes with the employment, the PMM or the PMI, and the prices. They are expecting a forecasted lower range on the PMI, so that should reflect within the employment and the prices as well. And especially if we see Monday's data come in slightly cooler as the forecasts anticipate, then that should go hand in hand with that. We also have the very important JOLTS job openings data, and again, this is also forecasted to be lower. So again, a lot of signals showing cooler labor market conditions, even though we've been seeing some of the jobless claim data sets giving us a little bit of, ups and downs. Um, a big thing for Wednesday as well that isn't on investing.com is that all the individual state unemployment rates come out. So, um, Wednesday evening, I'll be going over California's unemployment rate, I'll be going over Texas unemployment rate, and giving you a better view of what's expected to come later this week because we do have the unemployment coming in on Friday. But before that, on Thursday, the 8th at 8:30 a.m., we have the jobless claims, and again, that's the continuing and initial. They're expecting a increase in the initial claims. I heavily agree with that. I talked about this last week, but now that the holiday season is over, any of the potential holiday hires that were hired are very, very, very likely going to be some of the first people that are going to hit the chopping block. And I hate to label it that way, but um, very likely we're going to see these numbers pick up. I'd be very, very surprised going into quarter one, seeing these numbers decreasing. Generally, quarter one is one of the weaker hiring quarters. So we will see overall. Now, we also have the non-farm productivity at 8:30 a.m. Again, very important. We also have the exports and imports. I know many don't pay attention to that, but you can plug that into the GDP formula and that'll help you understand where the GDP is going. Now, we have been seeing a decline in both the exports and imports for a long period of time. So take that for what it is. I did go over the GDP and everything over the last week. I went pretty in detail about why I was seeing some major increases in the GDP percent that could have boosted it. Now, also on Thursday at 11 a.m., so both the jobless claims and the non-farm productivity come out in the pre-market, so we'll have a little bit of volatility from those very likely. And 11 a.m., we have the New York Fed expectations. Now, that comes with multiple different data sets, I believe. No, this is just the 1 year consumer inflation expectations. So that's not a super big deal, but the market does pay attention to it a little bit. So if that has an increase, then potentially you can see a downshift in equities. Very likely anything that is going to increase the treasury yields is going to be strength. So if there's less consumer or less consumer inflation, that's going to be more dovish rather than hawkish. Dovish pulls down on the yields, hawkish pulls up on the yields. So very likely, again, this would be a dovish reading, but I don't really expect that to be something to pull upward, in the current cycle anyway. We also have another Atlanta Fed GDP Now reading, and these GDP Now are actually pretty important because it's exactly as the name states it, is the Fed's reading of the GDP in the exact current moment. So when we see this going from what was, I believe, 4.5% and now pulling back down to the 3%, that's kind of a big deal. Now, we do have the consumer credit at 3 p.m. It's not a super big data set, but it will carry into Friday if there's anything major about it. Now, Friday is a pretty big day. 8:30 a.m. is the really big time slot along with 10 a.m. At 8:30, we have the average hourly earnings, both the month over month and year over year. Very, very, very crucial data sets as there has been a downtrend. Now, the forecast is saying they're expecting an uptrend in both of those readings. I heavily disagree with that. Everything that I've been seeing has been suggesting that we will be seeing a downtrend in those data sets. So I currently disagree with those forecasted numbers. We have the building permits, not really looking forward to that too much. The housing start data, that's important, but this is from October, so it is a little dated. I was having this conversation with another person, I don't remember who, but it was on Weeble, but I'm really looking at the data sets that are current and not so much the stuff that was released in September and October. We already know there's weakness in the market and we already know there's weakness in the economy. And I shouldn't say market, there's weakness in the economy from a labor standpoint. We know that's true, And and that's just something that all those data sets that were projected to be higher are just going to be revised lower. Um, is it anything I really expect any major movement from? Not really. I think that most of the major market analysts and everybody probably have that down. That is, you know, part of what's going on with the data and everything right now. Now, with that said, I do expect again the hourly earnings to increase. We had the housing starts. There was a negative last time, probably going to continue that negative downtrend. We have the very, very important NFPs, which is again the non-farm payrolls. They're expecting a slight decline. I expect that to be a lot worse than the 57,000. I expect that to be probably around the 44,000. The participation rate is also at 830. Important, but not as important. We also have the private non-farm payrolls. They're also anticipating a downtrend. And as you can see right there, there's a whole a forecasted minus 19,000 right there. So even with the the full non-farm payrolls calculated together, I'm seeing a lot larger than just the 57,000. So in terms of the downside anyway, it should be a lot less, I mean. At 8:30, we also have the unemployment rate and the U6 unemployment rate. I'll be going over the U6 unemployment rate later this week's one of these videos this week, but the unemployment rate, they're expecting it to pull down by 1%. I heavily disagree with that. I think that we will very, very likely keep this 4.6%. I think it will be trending upward over the next few months. However, I think with the last few data sets showing not exactly strength, but not extreme weakness within the initial and continuous jobless claims, I think that may pull into the unemployment rate not being as high, but we will have a better figure of this when we go over the individual state data, especially California and Texas. California has been on an uptrend. I believe it's at 5.6 or 5.7% right now, from a 5.4%, something like that. So major increase. Texas is on a slight uptrend as well right now. So we will know much more of the story when we get those releases on Wednesday. Now, again, that's a lot of data. 8:30 in the morning, all in the pre-market. At 10 a.m., we will have the Michigan inflation expectations and the consumer expectations and consumer sentiment. Those are very important because we already kind of know that the labor market is having issues. Now we really need to see that the consumer market is having issues as well. And I think that's been kind of the sticky part of all of the data sets and everything is that the consumer part has been weak, but not weak enough to show that, okay, we're going to start entering into a really sharp downtrend and basically into a recession. That hasn't kicked in yet. I do think it will though. So a lot of data this week, but again, just very, very quickly covering the timeframes that are important. On Monday, it's 10 a.m. and 12 p.m. Tuesday, 9:45 a.m. On Wednesday, it's 8:15 and then 10 a.m. On Thursday, it is 8:30 a.m., 11 a.m., 12 p.m., and 3 p.m. So quite a busy day on Thursday. Friday, it's that 8:30 a.m. time slot and the 10 a.m. time slot. So a lot of data, but not really when we break it down. And one thing I do want to start going over at the start of every week at least is the CME Fed Watch data. Currently, they're showing the percentage of a rate cut being at 17.2%. I know we had a little bit of hawkish data with the jobless claims last week as well, so that's actually surprising that this has moved up over the weekend. Um, Yeah, so nothing too crazy here. Go over March as well. Let's see. And we have also seen an increase in the percentage of the, 2% or two cuts, or, 150 basis point cut anyway. So yeah, that's interesting. So yeah, the odds of the rate cuts are increasing as much as the data and some speculators might be saying it isn't. We are seeing a little bit of a slowing within the third rate cut. For April, same with June, but that's a little hard to price in at this point. Yeah, they're really expecting three rate cuts by July. If we see the labor markets really start, having a meltdown prior to that, then obviously they're going to have to cut probably every single one of these meetings. So I just wanted to cover that real quick. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And going over the SPY technical analysis, we will make this video fairly short, or at least the SPY technical analysis portion fairly short. Um, Because I actually do want to go over kind of what happened on Friday first before we even get into the main price action. So, Friday was a very, very successful day for many of the traders in the group, including myself. I did scalp on Friday. I'll show a few results of that. Um, Thought it was going to be a little larger than this, but um, yeah, going over the hourly, we saw this cup close. And let me go ahead and really just draw this out. But what we were looking at entering Friday was that in the pre-market and the after hours, we are starting to see this pull upward. And I said, once we get to that range, very, very likely they're going to work on trying to build liquidity in a handle. Now, many of us timed puts at this literally right at the perfect spot. Um, Started dropping, had the pull up, and then dumped down. We made very, very, very good money on that. And on the downside, we saw that we were going through the 20 MA. So the 20 MA, I believe at the time was 683. Let's just say 683.25. I don't remember the exact number. But that means the lower bounds of the 20 MA itself would be around that 681. And the upper bounds again would be around that 685. So when we pulled to the 683 and we started pulling under that, to me that told me one thing, that they're going to try to buy up the 20 mile. We have liquidity right here that was a cup with a failed rejected handle. So this cup got invalidated, but that doesn't mean it's a bearish thing. That just means that potentially we needed more liquidity here. So now with that first, potentially the left shoulder formed, and let me go ahead and just delete a couple of these so that it's not so confusing. But with that left shoulder formed, we saw the price pulling downward, and I started buying at the 681 something. And we basically timed that perfectly, perfectly, perfectly. And from that 681, we were expecting this cup to fill back up all the way up to the open. Now, it didn't give us all the way to that amount, but we still pulled all the way back up almost to the 684. It was actually the 684 something. It's just not showing on the hourly. Um, but we had a very nice move from that. That was a very successful scalp to the upside. And towards the end of the day as well, we even had a second scalp in there, which This one was a little worrying for me. I re-entered another call after we did that initial sale. I saw we were pulling down, and on the day, let me see if I can go to the 30-minute. I was looking for this smaller up and handle to break out to that upside. So when we pulled down, and this was at the 5-minute middle Bollinger, which is something I've talked about in many of my videos, but this was the essentially right at the 5-minute middle Bollinger, which is a key buying range if you're expecting a rejection back up to the upside, and we did see that rejection back up to the upside. However, we didn't get the full move back up, but I did get a second successful scalp out of that. Now, out of these two scalps, and this is kind of what I want to show. And I'm not showing this to brag or anything. I'm just showing this because I haven't scalped in quite a while, but I do scalp. I've taught classes on scalping. I know how to scalp very well, and it's nice to see that it still works out. So let me go ahead and pull my wins up. Now this doesn't show the put side or anything, and these were just smaller scalps after catching the upside on the first one. But this is when we initially sold the 52 calls on TQQ, and we sold both of these SPACs positions. This one was crazy because I only spent 50 bucks on it and it gained a whole 1,000 bucks. Very awesome move. I was anticipating a little more out of it. And on the second move, when we went down and pulled back up again, I was able to enter an additional one. And towards the close of the day, we closed at, I want to say, 680.59 or 680.58. So I was able to pull that back up and get a very, very nice sell towards the end of the day as well. So two very successful scalps out of that, and that doesn't show the puts that we had as well. So it was a very nice day for me. Um, and that's what I'm trying to really promote within this channel is that everyone can kind of have really quality trades like this. You just have to be able to identify specific structures, specific setups, and you can really knock it out of the park. Granted, is it easy to sit there and spend 50 bucks and make 1,000 bucks out of it? No. Most people won't be doing that in their scalps. However, we had many, many scalping opportunities. Just that single session alone. And if you are good at identifying these setups, if you're good at using the tools that we talk about within the group, and I will be making videos on it eventually when I have more energy and everything, but with using these tools, with identifying these structures, you can have some really, really killer trades. There's people in the group that are literally making over $10,000 a day right now, which is super awesome. I was having a point back in 2024, 2025 where I was making some absolutely killer money before I got sick. I was getting very, very close to the 1 million mark. Has dropped a little bit since then. Um, Not too happy about that, but life continues and, you know, we move on. So with that said, let's go ahead and talk about the SPY technical analysis and seeing how the market closed at 683.17 on Friday. We did have a low of 679.82. The 5 mile, which on your screen you won't be able to see it, but it's currently at 686.05. That will very, very likely be pulling down to the 684. I want to say 684.60-ish range, but 684.80 to be safe. It can be even lower than that, so just be aware of that. Now, with that happening, we're going to be having the 5 mile starting to challenge the 10 mile again, which if we see another selling day from this, if we don't see, that potential bullish inverse head and shoulders to the upside. I wish my drawings didn't get all messed up. But if we didn't see that bullish inverse head and shoulders play out, then looking to the downside, we will see the 5 mod continue to pull downward, and we will see it start to challenge the 20 mod. And we talked about that last week, how with the consolidation of the 10 mod and the 20 mod, it really creates conditions where the 5 mod can pull up or down between those levels very, very quickly. So with the 5 mod pulling down, and again, it will pull down on Monday's open. So even if we do see absurd buying to the upside, that would just show a 5 mod bounce off of the 10 mod. So what's really important is now that we're really at this 5 mod level, we have retested the 20 mod again, and just to briefly point this out one more time, but each time we get to the 20 mod, for the most part, unless we're having major selling, um, generally each time we get to the 20 mod, it's a bounce to the upside, and that upside generally takes you all the way to the upper Bollinger. So that means there's quite a bit of money to be made um, with move from here to the upside. Now, to the downside, if we're going to see downside from here, then we have the lower Bollinger starting to build. We do have to break through the 10 mile, the 20 mile, and if we're starting to pull down even further than that, we now have the 50 mile to contest with. And again, that's a long-term trend we have not really been able to break at all. We had a little bit of short-term pulling under that, but we have not been able to break that since April. So, um, we have a lot of downside to test compared to the upside. Now, I know there's a lot of macro conditions going on, and there's a lot of people talking about sell-offs and everything, but technically, um, buying up the 20 ma is a proven and consistent bullish upside. So if we don't see selling from here, continued selling, if we don't see this bullish head and shoulder or inverse head and shoulders break, and that would mean basically entering into this red liquidity range, which we did a little bit on Friday. And that's another reason why I bought the calls right at that level, because these liquidity ranges, generally you're going to be trading all the way from one level of the range to the next. So if we're going to enter this range and really, um, start selling off, then I would expect not a bounce out of this range. I would expect continuation of selling within this range. And we also saw the VVIX pulling to basically this cautionary level, and I try to mark it out for an image, but um this is a really good way to view the VVIX, is that when the VVIX is, or I should just say the VVIX, the VVIX is within the green range, that means the SPY or the S&P is seeing buying. If it's in the yellow range, that means we're seeing slight consolidation. Potentially could be buying, potentially could be selling, but this is just the cautionary range that people are starting to hedge the VIX insurance. If we enter the red, that means that people are starting to sell. So very likely seeing on the SPY or, the SPACs that we would see heavy selling once the VVIX is pulled within this range. Now, on Friday, we saw it pulling within this cautionary range, but pulling downward. And that's what really gave me the conviction to enter those calls on the SPY. Um, once we broke that 92 range, that was telling me that really nobody's hedging right now. The upside's very large and very likely we're going to claim it. So that's what I'm looking at from here. I am truly looking for a 20 mod bounce. Excuse me, I'm losing my voice. But we've had this very bullish cup. We've had the top of the handle and verified this with the bearish structure. And from that bearish structure, we now have very good bullish structure. We could potentially see the right shoulder of this inverse head and shoulders play out, or this could be a double bottom. It doesn't look like it, but it could be a double bottom. And from that could be a very, very strong bounce. Double bottoms are some of the strongest bounces out there, and I don't have a good example right now I could show in another video because I'm trying to keep this one fairly short, but double bottoms tend to be very, very strong bounces. So those of us who entered calls at the bottom here, we should be having a very, very, very nice week. And by a very nice week, I mean that very likely with some of the data coming out this week, potentially we could be seeing all the way back up to the upper Bollinger. That upper Bollinger is currently at 693.34, but if the 5 month starts pulling back up, if the 20 month starts pulling back upward, the upper Bollinger will open back up to the upside and both to the downside again. So with that said, I am fairly bullish entering into this week, but just with the very, very, you know, you be aware of all the data this week. There's a lot of data that can shift things very, very quickly. So if you're extremely bullish on things, make sure you have some positions hedged for potential downside just in case we get one of these data sets giving us a stronger slash hawkish reading, showing that yields would pull upward, the dollar would pull upward compared to pulling downward, and that a lot of equity strength would be lost compared to gained, seeing when the yields pull downward. So um, I am bullish on the week, but again, conditions can change very, very quickly. With that said, I will be making an additional video going over precious metals, and I also want to do one for treasuries. I might do one for Bitcoin, but at least I want to cover the precious metals and treasuries for now. So with that said, I will talk to you all in the next video. Thank you for watching. I appreciate each and every one of you, whether you're subscribed or not. Thank you so much, and I wish you all the best success in your trading. I hope you all can have some absolutely killer days like I've had last week. Um, that was a very, very great trading day for me. Um, which was it's been rare because I haven't been able to scalp. I've been just too physically sick. I've been too physically sick to be able to scalp in the ways that I used to. So that was a nice win for me. Um, but it's all structure that we all follow, and it's something that you can learn as well. So um, I wish you the best. I will talk to you all in next video. Take care, everybody.